reason, so I'll try not to do that again. Sorry about that, guys. Press the red button. Yeah, Alt F4, right? Great. All right, cool. So here's what I was saying before, that what seems to be happening is that the markets are not firing on all cylinders, right? It's kind of stalling. So what's happening is you're seeing the small caps that are kicking ass straight up for today. Where was it? Small caps. Come over here. There we go. Right, small caps fucking took off, and they should have. We identified that yesterday, that we had a 1, 2, 3 down. Okay, we had the bear flag, went straight down, boom, popped. Fair enough. Okay, we're testing the all-time highs back here. All right, and then at the same time, so it's up 1.88% for the day. All right, and then at the same time, you have the Nasdaq down 1.46. What the fuck over, right? So it's a very, very confusing market. Um, sure, you have the Senate runoffs and all these things, and people again are making all these predictions that, well, if the Democrats win, the market will go down. If the Republican wins, the market will go. It's just garbage. You can't make this kind of analysis. Okay, can't make it. Um, so here's what we were talking about yesterday when I left it off at the end of the day. That you had a bear flag, it was in place, you had the 1, 2, 3 fully formed structure, very nice. And what you want to do is take it to the short side, right? And again, I don't have my little drawing tool, it won't load for the web browser, I don't know why. Anyway, so we had the nice little move to the downside, and I said you can take this short. It tested the previous low. And again, always ask yourself the same question. What's it trying to do? Trying to break lower. How good of a job is it doing? Not very. So whenever you see price coming back into above the previous low, that's a very good signal for a nice little trade to the upside. Okay? Don't expect it to go up to the moon. It's not that kind of a trade. It's a nice little trade. It's a small little trade that you can take. All right? It's a riskier kind of trade, but it does have some high probabilities. It's riskier in the sense that sometimes it just dumps and it keeps going, and you'll probably end up losing a little bit more than you're comfortable with. But if you are reading the message of the market and you're seeing the small caps are soaring, is it likely that that the Nasdaq is going to go much lower? Right? You look at the S&P; it's kind of flat. It's somewhere in the middle. Okay, it's still within structure. You look at the Dow Jones, right? Still within structure. So again, when you see this kind of trade set up and listening to the message of the market, and you see that price is not going much below the previous low and it's popping back in, you want to take that trade. All right? You want to take that trade. Now, if everything else is dumping and then, it's doing something like this, then the risk, is much, much higher. You don't want to take those trades. And that's what I'm trying to convey to you. All right. Okay, so we have a 1, 2, 3 down. The markets are not firing on all cylinders. They're kind of lopsided. One day it's the small caps going up. The next day it's the trash stocks that are going up, but the small caps are coming down. And the other one is the Nasdaq is going up, but not everything else is following. So this is what I mean. The cylinders are out of sync. And it's leading to this churning kind of market where it's kind of going sideways, maybe a little bit higher, and then comes back down, and it's not definitive. And that's what is so difficult about when you're trying to create a new bull market, passing the previous highs, you get those kind of difficulties, right? And I showed you that yesterday when we went back to 2016, right? Similar kind of reaction. Now, don't look at it from this perspective that I drew it. Look at it from this perspective here, where what you're seeing is that the market is dumping, popping up, dumping, popping up, dumping, popping up. You see it? Right? It's not very clear. And then ultimately, it takes off. Now, granted, that was a much different market. The economy was much better. Everything was, fine. It's not like it is today, and that's the problem with um, this market in terms of going into a new bull market. And I'm not saying it can't, but what I'm saying is that if it does start to do something like that, it starts to take off and everything is great, well, pay attention to this, that the S&P earnings yield is getting very, very low historically. This chart goes back to the 1880s. So we are historically low on earnings yield. Blech. Earnings yield, right? And then you look at the 10-year, right? And the 10 years historically low, down to 0%, right? So you gotta think of ratios and not nominal dollars and so forth. Keep that in mind. All right. Okay. Now, when you look at the S&P 500 and it's back into structure, the point of control from the previous low is somewhere in here. It's kind of going back and forth. I'm going to be interested to see if it just keeps going sideways until it touches this support area and then takes off. Because our bias is still to the upside, right? So if it does something like that, then you're going to go incredibly bullish. And if that happens, oh, come on. No, I don't want to leave. If that happens, this is negated. This is done. It's done for. It's incredibly bullish, right? If it doesn't have a nice clear breakout, then you end up with something like this, right? Kind of churns and then boom, it goes straight down. All right. And that would be a nice little corrective move to the downside that we're looking for. Okay. So this line is going to be very, very important going forward, especially as we go sideways and the pistons are not firing, in sequence. And you get all this kind of fuckery, right? So just keep these things in mind, right? That it's a very difficult market to trade right now, decisively, one way or another. The bias is to the upside for sure. So long as we remain the previous high, we remain above it, and that's what I told you also in the last couple of videos, that as long as we can maintain above this previous high, all systems will go to the upside, right? So everything everything is intact for what we've been saying. All right. Okay, so let's go through the market. Let's see what the market is telling us. And we'll start with the equal-weighted S&P. Right, equal-weighted S&P is doing really nice. It's breaking out. Gave us a false signal here that it started to break down, and then boom, straight up. So it's the broader market that is rising right now. Right? Dividend-weighted S&P. Nice recovery to the upside. I gave up and started an ad. Longs. Yeah, again, be careful, Alessandro, with the longs. Because, again, what I just showed you, 2016, you get these liquidity breaks. That's what we call them now, right? Liquidity break. Just kind of breaks down only to go back up. It's not necessarily a wave, because we're in a particle market. And what do I mean by a particle market? This is what I mean by a particle market. Okay, there's a wave market and a particle market. Particle markets just go straight up; they don't respect waves. Wave markets are something more like this area here, right? Like this area here. Okay, so this is a particle market. It's just going up. It's manipulated. And I don't mean it in a bad way, manipulated. Like, oh, there's a bunch of guys with suits, 6 of them underneath a light in the dark, pushing buttons and manipulating it. That's not what I mean. I mean there's excessive deficits and excessive QE that is artificially creating false signals to the market that is pushing prices higher. Okay. Um, Not closed the shorts. Yeah, exactly. That's a great point. You know, keep the hedge in there. Just try to ride it out. If you're short and you're kind of stuck short, just ride it out. Eventually, we're going to get a signal that's going to be very clear. And when you look at this from this perspective, okay, it's starting to get tired. All right, and that's why you need that new push higher. You need it. Um, so it's going to come. The correction is going to come. Okay, is it going to be a deep correction, a shallow correction? I don't know, but it's going to come. All right. All right, let's get back. So dividend weighted we looked at. Let's take a look at the VIX. Okay, VIX coming right back down. All right, and that's what we talked about going into the new year. That you're going to have some jitters. You're going to, have some people hedging, trying to figure out what's going on, and now that's starting to unwind. The NYSE breaking out incredibly bullish. Okay, so far we have the broader market breaking out bullish. We have the NYSE breaking out bullish. We have small caps are bullish. So what's the message of the market so far, right? Bullish, right? So you want to be long. Um, Dow Jones coming up against the resistance area. Little false breakdown here. So what we can expect is you break the low, you're going to break the top. Okay. It doesn't mean that it's going to break the top and off to never land, right? It's not what we're talking about. We're just talking about a breakout and then a correction. That's what we're likely to see. S&P 500 bouncing off. Okay, so look for this one to push higher. NASDAQ is starting to come back and test the previous resistance area down here. Okay, so the buys is to the upside for the NASDAQ, and it's down 1.3. So it's got room to run. All right. Now the real bullish setup will be breaking this trend line, right? Because this is what it looks like right now. This looks like a 1, 2, 3, right? Which way is it? Is it pointing? It's pointing down. Which way is the next move likely? Up, right? That's how they fool market participants, right? That's the whole point of waves. So for now, look at for the point of control as a target. Okay, point of control is right up here, 12,725. I'm going to start taking off these lines. I don't think we need them anymore. We kind of proved the point of this rising wedge, right? That it was going to correct. Sure enough, it did. It came down. It didn't touch. It didn't have enough strength to touch the bottom of the trend line. Sure enough, it went back up. Then it corrected. All right. So all these things they matter. I leave them up there so you guys can see how it works. I don't leave them there for me. All right. So these are liquidation breaks. All of these are liquidation breaks. See it? Liquidation break, liquidation break, liquidation break. Right? And that's been the theme throughout this particle market. And that's why I've added this new term, liquidation break. So let's get rid of this, get rid of this. I think we proved the point here with the bear flag, right? Wave 3 down, compass, blah, blah, blah. So we don't need this anymore. All right, so we're in the middle of this kind of falling wedgie looking pattern that has broken down from the bigger structure, right? This rising wedge. Okay, so I'm going to take out the rising wedge. Come on, baby. All right. So, what are we doing here now, right? If you look at this trend line. It's having difficulties getting through it. Right? Keeps falling back into structure, but it's maintaining above the previous highs. Okay. So the real bullish breakout is going to be breaking this. All right. Get rid of this. And get rid of this. All right, good. Let's continue. Small caps. A nice little breakout, testing the previous high. I don't think it's going to go much higher than this. Okay, I think this is a limit. Right there. Okay. We said that this structure here needed to correct. It did. It wasn't very deep. Right? So that's bullish because the whole structure now, here now looks like a high base. Okay, it's just kind of going back and forth, building pressure for more upside. Doesn't mean it will, but that's what it's starting to look like. Okay, so this is no longer needed. This is not needed. This is understood. This is not needed. Sorry. I try not to look at these charts unless, we do it together. And the reason I do that is because I don't have a bias going into it. So you see what I see when I see it. Okay. Now, the bigger structure is still corrective looking, right? This ultimately, at some point, 1, 2, 3 up, at some point, this is going to have to correct. Bigger time frame. So keep that in mind. All right. Keep that in mind. All right, transportation, average. Nice little pop-up, broke the bottom, popping back in. Again, this could possibly break the previous resistance area. IPOs are not doing all that good, right? So what's that telling you? This is contradictory to the small caps. It's starting to break down. All right, let's see how much it breaks down. So that's down 3% for today. ARK is holding for now. Google's and Fangs and all this thing broke down, but it's still at the point of control, so no definitive, direction here either. And again, it's those cylinders are not firing in sequence, so the market is, don't expect the market to go much higher when it's doing that kind of crazy shit. Europe is doing really good, right? So we've said this from the start of the year. Even before that, look at the UK. Beautiful fucking breakout. Beautiful, right? Doing really good. Now, this is what I would expect the real market to look like. This would make a lot more sense to me. Right? But that's not what it looks like in the US, right? Why? Money printing, QE, blah, blah, blah. Germany, right? Pushing up against resistance, building that high little base here. Look for this to break out. So this is the high base. Consolidation at the top of the structure, right? What is it doing? Building pressure to break out. All right. Denmark, nice little move to the upside, continues to push higher. Right now, it's just kind of pausing a little bit. That's okay. Let it digest. It's healthy. Wilshire, this is the total market. Okay, again, rising wedge. Don't forget this. At some point, this has to correct as well. But for now, it's just kind of high basing as well. World Stock Market Index, which is basically the Wilshire. Okay, kind of the same deal. All right, airlines, no follow through. Okay, so these are the trash stocks. These are the catch-up plays. Okay, you would expect this to be going higher with small caps, with the Nasdaq, and they're not. They're not. China, beautiful breakout, kicking ass all over the place. We've said this from the start. Asia is doing much, much better than the US. And this is why I say, think about all the people that are like, oh, if the US coughs, the rest of the world gets cancer. Forget about those days. That's not America anymore. Forget it. Okay? We're starting to lose that effectiveness that we used to have on the rest of the world. Even though we're still 25% of global GDP, the rest of the world is starting to detach. Right? The world reserve currency is starting to weaken. It's not the same world that we used to live in. Right? You want to blame Trump, you want to blame whatever. I don't know, but it's not the same world. The fangs of China, all-time high now. Okay, this is why I put this here. I said, look for this one to break out back here. Sure enough, it has. How much? Don't know. It's up 7.3%. Right, that's good for an index. That's very good. Nifty 50 starting to pause a little bit up against resistance. Okay, Japan not doing much. Taiwan kicking ass. Cosby kicking ass. Little pullback. Saudi still hasn't broken out. Australia still kind of lagging down here. Look for this one to push higher at some point. I don't know if this is going to break here or it's going to kind of do this, but the bias is to the upside for Australia. Brazil, high basing. Okay. Again, for new guys, this is a high base. Building pressure for more upside. The trend line here, the trend line here is gray only because it's not validated. You don't have enough of a hook on this wave. What do I mean by hook? Enough of a hook to say, okay, this structure is valid. Oh, come on. To say this structure is valid. Oh, come on, man. This is why I need my drawing tool. That this is valid. It's not valid. This wave has to hook down more to validate it. So I leave it gray because we can adjust it until it hooks, right, to whatever we need it to. All right, emerging markets breaking out. Weak dollar, strong for emerging markets, right? They're going fucking vertical, breaking all-time highs. Okay, breaking all-time highs decisively. In fact, you can say it's going incredibly bullish. Okay, the rising wedge again is supposed to correct. Okay, you get this rising wedge is supposed to correct. Instead, it's doing the opposite. And this is what I mean by particle market. A particle market just goes straight up, doesn't give a shit about waves. It just, goes in one direction. BRICS, right? Brazil, Russia, India, China, breaking out. We said this would happen. Looking good. Real estate weakening. Mortgage applications for the second week in a row started to decline. Okay, so keep that in mind. Let's talk a little bit about real estate. All right, we've had very low inventory. Prices have been pushing higher. There was an article yesterday or somebody video, CNBC, they were talking about how car prices are pushing higher. I think the average car sold from Ford was 41,300 something. So think about it. Why does this matter? It matters to GDP. It matters because what's happening is, remember, GDP is just the accumulation of all the transactions that take place within an economy. So while you may have an economy that's normally functioning that's this big, okay, and let's say it's 21 trillion, right? What happens if the economy shrinks a little bit, like it does now, okay, but the prices rise on big ticket items like homes, like cars? But what happens to the GDP? GDP cannot recognize that there's less people working, right? It's only going to recognize price, the amount of dollars that are exchanged. So it's going to look a lot better than it actually is, only because people are paying more money for the same thing. So, you get these zero finance uh, um, car sales, right? And then they're saying, okay, well, I'm going to pay 0% interest rate, but I'm going to pay a higher price for that. It creates that, artificial inflation. It's not artificial, but it's artificial in the sense that it's 0% interest rates, but it's not really 0% because you're paying higher price for the car, right? So that's going to show that, oh, look, the economy is doing better than what it really is. No, because you're selling fewer cars. There's lower inventory, right? The interest that you would have paid on a car is not going to be paid 4 years from now or 3 years from now. It's going to be paid now. So it creates that artificial. And these are big ticket items. So keep that in mind. All right. These are very important points that you should put a little bit more weight on when you're looking at data. Banks. Very happy that Biden won. Okay. Typically in stock bubbles, banks don't do bad. They do okay. All right, so just keep that in mind. You saw that back in 2000. So banking, yeah, really happy. Oil, okay, $50, hovering back and forth, back and forth. Look for this to push higher eventually. Okay, this will push, I don't know, maybe 53, something like that. High basing, another push up, and then start to correct within the structure. At some point, the structure will have to correct. I think at this point, I'm going to take this out because it's not needed at this point because it should have broke down. If this subtlety here, right, where it doesn't have enough strength to come and touch the top of the channel, if it doesn't weaken and break the structure, then it's not valid anymore. Right? It should have broke the structure. Then this would have been valid. But since it's not, then the chances are, especially with a nice little high base, that you're going to get another push higher. And again, that's typical when this occurs. When you hit round numbers, you hit 100, it'll go to 110, 120, 130, then come back down to 100. You hit 50, you'll go to 52, 53, 54, possibly even 55, come back down to 50. That's normal behavior. People like round numbers for some reason. Gold pulling back a little bit today. Okay, nice little breakout. Look for a break test go. Break test go. Right. So silver, a little bit of a pullback. We had this one to break out eventually, and that's why this arrow is here, and it's doing a good job. Right. Commodities overall just screaming higher, going incredibly bullish, coming up against resistance. Let's see how this is going to pan out. All right. So you had the 1, 2, 3 down. 1, 2, 3 done, and now it's starting to go back up. So what we want to see is that one. Oops. Come on. Okay. One, you want to see that. Fuck. I need my drawing tool, man. One, you want to see that this trend line is going to break here, and it's about to do that now. It's actually probably done it, if I'm not mistaken. Yep, it has. So it broke the first trend line, and now it needs to break the second, which is this one right here, and then the next one is all the way up here at 200. All right. Now it might have a correction or two because this is starting to look a little bit like a rising wedgie looking thing. Okay, so you might get a correction, come up here, and then start to take off again. All right. So keep that in mind. Take this off. It's not a valid. It's not a valid line. All right, commodities overall ready to break out, ready to go. Okay, huge. We've talked about this for a long time. Precious metals breaking out very nicely. A little bit of a pullback. Base metals, okay, pushing back higher. We're looking for more upside. Steel kicking ass all over the place. Palladium still hasn't moved, but consolidating. Copper testing the top of the flag. And agriculture continues to rise. This is not going to be good for people. Sugarcane is going higher. Corn is going higher. Wheat, right? Remember this pullback here? I kept saying this is a buy. Okay, well, here we are. That's why we had this arrow here. Soybeans, look at that. To the moon. There was something in agriculture that said that revenue for farms was down 1%, but their profit went up 45%. This is what happens when the government intervenes, right? It's amazing. Amazing. Bitcoin. Yeah, baby. All right. Hit 35 overnight. Look for this one to continue to push higher. Okay. Oops. Look for that to continue to push higher. And maintain this trajectory. The longer it stays as high as it does, the more likely people are going to buy. Right? It's FOMO, fear of missing out. Litecoin, right? Doing good. Ethereum. Again, this is what I mean by round numbers. Look at that. 1147. Yeah, 1147, right? So that's what happens. You hit 1,000, it goes to 1,100, 1,200, 1,300, 1,400, and it comes back down. All right. Round numbers. In this particular case, we've talked about it. Again, just going to point it out. I know it's boring. Sorry. There might be some new guys, so I want them to understand. 1, 2, 3. Okay. This was our compass. Right. So you're going to get that follow through eventually, and we got it. And that's why 3 is here. Now, more likely than not, we're going to test this previous high. And what's the number in the previous high? 1426. So this is what I mean. You go through 1,000, you'll probably go up to 1426 or whatever, and then start coming back down. And then more likely than not, we're going to break this previous high. You'll create some kind of high base up here. Something in here. Okay. It might take a little bit longer and then push higher. All right. But the first target is 1426, whatever. All right. Forget about Ripple. All right, dollar. Everybody wants to be bullish the dollar. Okay. Made another new low, kind of grinding lower. These kind of grinds put you to sleep, and they keep going lower. Here's dollar, Japanese yen. Little pop today. Euro, little pullback. Pound, little pullback. We're still waiting for this one to take off. Euro, pound, Turkish lira, ruble, CAD, Australian dollar is doing good. New Zealand's doing good. Dollar is strengthening, weakening against the peso. Sorry. So look for this one to break down here. All right. Right there. Look for this one to break lower. Dollar against the Chinese yuan is just kind of consolidating down here. Right. Still have a little bit more to go to the downside. 10-year. Look at that, baby. Right? 1%. Remember this arrow we've had here forever and a day? Remember these cup and handles? See that cup and handle? There it is. Boom. right? So what are we having? We're having compression. We're having compression. The bond interest rate is rising while the earnings yield is falling. Okay? So you want to take on a whole lot more risk in stocks for an extra 1.66% of interest. I'm sorry, of earnings. You see what I'm saying? It's not very smart. It's not very smart. So eventually you're going to get this correction in the stock market if this continues to push higher. The target is going to be somewhere up here. Let's see. Let's say it goes straight up right now. Somewhere around 120. Right? Somewhere around 120. It's 104 right now. This is a big move, by the way. I've been talking about this forever and a day. It's up 105% from where it was back in August. It's a big move. It's a big move. All right. So if this breaks, they can rationalize, the incubator economists, they can rationalize why this is happening, blah, 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 blah. End of the day, it's money printing, QEing. That's what it's about. Okay. And the Fed is probably going to step in at some point and start buying the 10-year to push it down. Right? They're going to push that rate higher, interest rate falls. So that's what we expect to happen. All right, Royal Caribbean. Again, if you want to do that catch-up play, right? This is why I put it here. This is a nice risk reward. We can buy Royal Caribbean and take it to the upside. Norwegian, still coming back down. Carnival, still coming back down. Let's take a look closer at the FANGs. Apple came back, tested the previous high. Amazon, right at the bottom here. Let's see if we can hold. Microsoft, bouncing. This is no longer valid. Okay. So it actually kind of broke here. Let's see what this ends up being. Broke the top, broke the bottom, wedgie looking formation. This is more or less a head test of the head and shoulders. It's the second one, by the way. Facebook starting to, fall back into structure. Okay. You want to take Facebook to the long side as long as it breaks above this trend line. So let's say 275. You can see a big pop. Netflix breaking down, not good. Google, right? What's it trying to do? Go lower. How good of a job is it doing? Not very. Nvidia, we're still looking for this one to go higher. Tesla 756. All right. Again, I've said this many times. Look for 800, 850 in Tesla. PayPal coming back a little bit. Snapchat. Let me put the long here. I think this has more upside. Shake Shack, more upside. All right. And that's about it. I won't go through the airlines. They're popping a little bit today. Nothing significant. Okay, so let's get back to the NASDAQ. Right, there it is. See it? See what I mean? It's popped up now. Now it's only down 0.86. That's a 0.5% move just in the time that it took us to go through the market, right? And early on, we identified that the market was bullish and that NASDAQ is not going to stay down for long. And again, it's a simple, easy trade. Let the markets tell you what to do. Don't fight them. Right? Just listen to the message of the market. Now, obviously, this is more for day trading, short-term trading, and so forth. I worry more about the macro stuff, right? The bigger trends, which I don't really cover too much here. But for short-term trading, this is the way you want to do it. Small caps trying to push higher. Transportation's pushing higher. S&P 500, boom, breaking out. So look for the new all-time high to be tested. All right. Dow Jones, ooh, breaking out, right? This is what I was telling you. You break the bottom, you're going to break the top. You're going to break the top. And the time now is 11:20. No, what time is it? It's 10:26. It's a 10:30 reversal. So be aware of that all of these can start to reverse here. All right. Okay. So again, you see this stuff live, right? It's not like I'm showing you this hindsight. I told you that if you're going to break the low, you're going to break the top. All right. Same thing with NASDAQ, that this is going to pop, right? So that's what bare knuckle charting is all about, risk reward, right? All right. IPO concerns me, definitely. Because if these were the high flyers in 2020, right? You IPO, your stock goes up 150% in months. And now it's starting to weaken. Now, if you are, again, bullish, you wanna buy here, right? For one more up. Okay. This can be just a mere correction for more upside. ARC starting to pop a little bit. All right. So let me go down to a minute. Look at that. Beautiful. Beautiful move to the upside. Look at that. Down 0.76 now. Easy trades. Easy trades. Free money. Free money. All right. In terms of valuation, look at GDP, right? Flatlining. And look at the blue line is the Wilshire, is the total market. All right. It's up to 40 trillion. Double of what GDP is. Unheard of. But this is not a bubble, right? My ass. Total assets under the Fed is approaching that 7.4 trillion. Okay. We talked about this extensively. The reserves and so forth. I won't get into that. How much higher do you think it could probably go? We're talking about the stock market, right? It's tricky in the sense that, remember, if we're going to pump in $1 trillion of a market that's, let's say, I think it's 34 trillion for the U.S. And then let's say we get another, we're definitely going to spend another 2-3 trillion, right? So that's 10%. So at least 10% higher. And then you have all the loans, PPE. I don't know how that's going to work out, and that's what makes it a little bit funky. I think about 15%, 20% maximum to the upside. But again, it's not that clear in the sense that, interest rates are rising. How much more can they rise? And I think that's the better question. How much can interest rates rise before they start to affect the stock market? And if you go back in time, you're going to see that there has been periods of time that interest rates were, the interest rate was actually higher than the S&P earnings rate. Okay, so that means that you can see, oh fuck, I don't have anything to draw with, but you can actually see, let's say, the earnings yield down to 2, and you'll see it, and I'm not saying this is going to happen, I'm just giving you an example. You can see the earnings yield down to 2, and you can see interest rates at 2.5. Okay, you can invert. We've seen that in the past, but we've seen that with inflation. We don't have inflation now. So that's why we're kind of in uncharted territory. So that's what comes into my mind when I'm trying to figure out how much higher can we go. You know, it's difficult. It's difficult to say. I think you need a correction before you go higher. That would be more bullish, right? You get a correction, something like this. Okay, that would be more bullish for me. If you were to give another target, you can do it another way. All right, and I'll show you another way you can do it. It's crude, but effective. All right, 63-day moving average. Okay, and here's 2022. What if I drew this all the way out to 2022 in the current trajectory? All right, something like that. Then you can measure it from here. Where are we? Somewhere here. 30%. 30%. I don't think the trajectory would be in the same manner. I think there's going to be a correction at some point in 2021. So you reduce that with whatever the correction, let's say it's somewhere between 7 10%. Give it some time to adjust. So you have to kind of bring this down a little bit, and then you end up with your about 20%. See what I'm saying? See what I'm doing? Makes sense? Because if you go back here, you know, what's the trajectory here for a year, right? 78. But this is multiple years, right? So about 25% per year, something like that. Right. Oops. Let me adjust my 63-day moving average, by the way, guys. It's just, it takes a quarter for, at least a quarter, for funds to put on a position. Okay. And I put this here because if I want to go to a smaller time frame, I know where the 63-day moving average is on a daily, right? Which is this line down here. That's why I do that. All right. Okay, look at that. Look at NASDAQ tear. Look at that, 0.66 now. That's a big move. And if you guys got it from the bottom, like let's say somewhere in here, right, that's 1.47% move to the upside. It's huge. 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 And all it did is just come back into point of control. It didn't do anything extravagant, right? There's nothing special about it. So again, you see the small caps kicking ass. You see the broader market, the S&P just kind of flatlining. Dow Jones, you know, pushing a little bit higher. And then you see the the Nasdaq, the market leader, down, you know, almost 2%. It's a no-brainer, right? Because you got the technicals in place to make the trade. That's why you got to listen to the message of the market. Any other questions? Great question, James. Thank you. Any other questions? Anybody? Anybody? All right. Think of some questions. Questions are the best thing, believe me. They're You'll get a lot more out of me by asking questions uh, than me just giving you the analysis. So think as many questions as you can possibly think. I'm going to go have a cigarette break. I'll be back.
Mic off. Mic feedback off. Mic on.
All
Mic
right, I'm
feedback
back.
on.
Look at that move. Woo! Kicking ass. All right, so Nasdaq now down 0.44. All right. Let's see what the fangs are doing. They're still down 0.71. Not much. Not much. UK is really just fucking taking off, right? Again, you see the high base, right? Right in here. Boom. Germany still hasn't broken out. Expect this one to break out as well. This is also a high base here. There's going to come a time when these high bases are going to fail. Just not now. Not in the particle market. And I think that's the big learning lesson for me for 2020, right? How to better analyze particle markets. I also learned how quickly the market prices in deficits and QE, right? I thought it would take a lot longer. Not the case. A lot faster than I thought. So, let's see. Transports 2%, right? So, at this point now, even though it broke a little bit here, this is now starting to look like a This is now starting to look like a bull flag, right? So we're going to put the little arrow here. Again, guys, I hate repeating myself, believe me. And I feel really bad for my subscribers that have to hear the same things over and over. But in case somebody who's new, who doesn't understand what I'm doing, that's why I'm repeating it. Bear with me. I'm sorry. I know I feels you. It's probably boring as shit. Stop run this morning for sure. Yeah. And again, it's like, oh, if the Democrats win, the market's going to go down. Oh, if Biden wins, the market's going to go down. None of it was true. None of it. Don't, and I'm not saying it to you, trader, just in general, don't base trading ideas off of that kind of bullshit. Remember how, the 60-40 portfolio has to be rebalanced and they have to sell 340 billion worth of stock, right? Going into the end of the year, blah, blah, blah. Remember that? Don't listen to these social media idiots. They're morons. They're just creating content. It doesn't mean anything. But the problem is that content is going to influence people when they're going to go out. They're going to make stupid mistakes. They're going to hurt themselves. Learn to read a chart by itself, the way I'm showing you. You learn how to read a chart, you're going to do a lot better, I promise you. There's no question about it. Okay, 1, 2, 3 structures. Where's the best risk reward, right? Understand the macroeconomic fundamentals, right? Even though right now they're completely, fucked up, right? They're expanding. That's what I mean, right? Completely detached. Okay, it's going to snap back at some point. I promise you. It always does. It always does. So speaking about good risk rewards, right? We're at the 10:30 reversal. What is it now? 10:53, something like that. Look for a price, going into the lunchtime period, perhaps come somewhere up here and start to fade away. Okay, and then perhaps you get the breakout in the end of the day or something like that. Perhaps in after hours, perhaps tomorrow. But you can definitely, if it makes it all the way up here, you can definitely take a short for a day trade, right? For something quick. You can do that. I'm not saying you should. I'm saying you can. Why? Because the structure is in place, right? 1, 2, 3. Okay, this is a valid structure. This is the hook, right? So if you want to take it, so long as it remains within this structure, the bias is to the downside, right? So you can take a nice little short, see how low it takes you before it starts to pop back up. And if it breaks out something like this, then you flip the trade to the upside. Okay? Learn how to read the charts bare knuckle style, right? No RSIs, MACDs, bullshit like that. It's garbage. Garbage. Small caps up 3.25%, breaking to new all-time highs, right? Big pullback, boom, up. Okay, so resistance somewhere up here. Another 0.72 to hit resistance. Gold down 2% for the day. Not sure why it's doing that. I suppose more likely than not is because the fear, right, of who's going to win. Not that there was any fear, because it didn't matter. I mean, it does, but not. You know what I'm talking about. Yeah, so it's coming back down again. Break, test, go. Right, breaks out, comes back, tests, further upside. This is just bullshit move down. Silver. Okay, right at support. Right at support. If it starts to break down, okay, then different story, right? If he starts to break down, it's a different story. Oil, 50.23. Again, look for this one to push higher. I should put the arrow here. And by the way, all these arrows that I put in here, they're tradable, right? You've seen how often they're right. You know, why don't I do trading signals? The reason I don't do trading signals is because, think about it, right? Can I write a resume for you? Even though I know pretty much everything about you, can I write a resume? Is your resume going to look like every other person that's watching these videos and so forth? Right? It's not. It's going to be different for every individual. It's always different. So which trades you want to take is up to you, right? It's the way you trade. I give you, the analysis. You guys figure out what you want to do from there. Even if I gave the same trading signal to every single one of you, you would all have different results. Right? It's like a resume. It's always going to be different. That's why if you go and you do these subscription, trading type of services, you're going to get your ass kicked. It's not going to work out the same. I promise you that. All right. So let me show you this now. All right. We talked about this one. Right. Dollar down, stocks up. Dollar down, stocks up. This has been the case for a very long time, since March. Okay. So don't forget to once in a while do the analysis and adjust it for the dollar. Where the fuck is the star? Okay. Now remember, 2 days ago this broke down. Okay, so you want to keep this is the real value of the Nasdaq, and it's having difficulties breaking all-time highs adjusted for the dollar. Okay, so it's not it's still below structure, still hasn't made new all-time highs. All right. So, what I'm thinking about is James' question, how high can this go? Well, you know, nominally it can go another 20%, let's say, but, where's the dollar going to be, right? Sorry, stop run this morning for sure. ES is up 6 points. Yeah, very good point. Very good point. Yeah. I don't know about the 10-point increment thing. That's something new to me. Something I'll definitely look into. Uh, yeah, they got crushed. Look at that. Right. There's that new all-time high. We said that was going to happen, right? It's going to push towards that all-time high. And where did it bounce off of? Right at the point of control. Boom. Good point, trader. We don't need this. Don't need this. Again, has to maintain above the previous high. It's done a very good job doing that. Okay. And why did I say has to maintain above the all-time high? Because look at this, right in here. See, this was the all-time high back here, and it kept doing this shit, right? So you want it to stay above this area for the long side. It's not complicated. It's not rocket science. And it's doing that effectively. Look at that. Oh, the markets don't like Biden. The markets don't like Democrats. The markets don't like whatever. Yeah, my ass. Markets are going straight up. All right. So I'll leave it here. I'll probably come back end of the day. It's going to into lunchtime. Um, if I'm repeating something, guys, pay attention to it because I'm trying to, put something in your brain that I think is important. Um, I hate repeating myself, but it's important. Okay, so keep those things. I used to have an instructor. He was great. He was a system instructor on a brand new airplane. It was a Dornier 328 jet. Nobody in the world has ever flown it. And what he used to do when it was something important, he used to bang on the chalkboard. And be like, guys, this is important. Uh, Maybe I got to do something similar because it really helped me. Like, oh, okay, this is important. uh, it seemed, trivial at the time when he was saying it, but when he banged on it, I'm like, okay, this is gonna mean something later on. So maybe I gotta do something similar. But for now, just my repetitiveness is my banging on the chalkboard. Okay, that's it. I'll come back later. Thank you very much. Like, subscribe. Give these stuff to other people. All right. I think it's going to be useful for them, at least as an alternative view. If they don't agree with me, that's fine. It's going higher. Not good. Yeah. Well, higher in the context. Remember, not all cylinders are firing at the same rate. We're churning. We're churning. Okay. The fact that the Nasdaq started to catch up to the small caps, and the S&P started to rising in the broader market. Um, you know, look at the chart. Where has it gone? Right? It's kind of grindy, right? It's a slow kind of grind higher. So don't be thinking that we're gonna do something like this. Okay. Again, this is more of the day trading stuff that we're looking at now. All right. All right, guys. Any other questions before I go? No? All right. You can, if you think of something, ask me later. Ask me later. All right. Thanks a lot, and I'll talk to you later. Bye bye.